If you're dreaming of retiring early, imagine building a portfolio that can generate 2 lakhs every single month ethically. But if you're not sure how to start or implement that, today I will show you how Sharia compliant funds and gold can help you reach that goal. Hello everyone, my name is Latish and this is Alt Invest. I specialize in guiding families and individuals like you who want to retire with a proper plan and monthly income through Sharia based investments. Also, I have prepared a complete Sharia based course which you can go through my website, in which I cover a whole array of topics that help not just in building ethical wealth but also on how to do asset allocation. Along with that, you will find all the calculators for you to do it yourself. So if you're looking for a course related to that, please click on the link which is available in the description. And if you do not want to do it yourself, you can always reach out to me at the number which you see on the screen, also in the description. You can chat through the WhatsApp link which is available, as direct calling would not be working on this number. In today's video, we will analyze two ethical mutual funds, Tata and Taurus Ethical, and combine them with gold. Together, we will plan a portfolio that targets a post-retirement income of 2 lakhs per month. To calculate how much wealth you need for a 2 lakh monthly withdrawal, we will look at three factors. Retirement length. We assume life expectancy up to 80 years. So a 45-year-old needs to plan for 35 years retirement. And for someone who is retiring at 55 years, we will plan for 25 years. We will also consider inflation. We assume 6% inflation, so your monthly income must grow to maintain purchasing power. Also, asset allocation. Because Sharia prohibits interest-based debt, we use a blend of equity and gold. Equity returns are estimated around 12% per year. Gold's long-term CAGR has been around 13.6% for the last 10 years and 10.83% over 30 years. To be conservative, we will assume 10 to 11% returns for gold. It's important to invest in gold the halal way. According to AAOIFI standards, gold must be bought on a spot basis with immediate payment and transfer for ownership. Physical gold and ETFs that hold physical gold meet these requirements, while futures or derivatives do not comply with this. We will use physical gold and Sharia compliant gold ETFs for the conservative portion of our portfolio. Now let's calculate the corpus required. Assume you want to withdraw 2 lakhs per month, which is 24 lakhs annually, and your portfolio grows at a different real returns after adjusting for inflation. If you are looking at a mix of 70% equity and 30% gold, here is what that means for three different ages and three different investing styles. Let's start with someone who is age 45. So you will have 35 years of retirement. Aggressive portfolio of 70% and 30% equity and gold. You will need a corpus of 3.7 crores. For a balanced, which is 50-50 in equity and gold, you will need 3.9 CR. And for conservative, which is 30% equity and 70% gold, you will need a corpus of 4.1 CR. For someone who is age 50 with a 30-year retirement, aggressive corpus would be 3.5, balance would be 3.7 and conservative would be 3.9 CR. For someone who is age 55, the corpus required at that age would be 3.3, 3.4 and 3.5, which is for aggressive, balanced and conservative. These numbers are significantly lower than typical debt equity models because gold's long-term returns are higher than debt. The more equity you hold, the lower the corpus required, but expect more volatility. If you prefer stability, then always ensure your gold portfolio is also as high as your equity. So how do we build these corpus? Like I have shared, we can look at investing in equity and gold. To build the equity portion ethically, let's explore two Sharia compliant funds which are there currently in the market. First one is Tata Ethical Fund, an equity fund that invests in Sharia compliant companies aiming for medium to long-term capital growth. Although in the last 1 year, the fund has not given great returns, but you should always look at long-term returns when you are looking to invest in mutual funds. It has a large AUM of around 3,600 crores. The 5 and 7 year SIP returns have been around 10 and 13.4% respectively. Top holdings include TCS and Hindustan Unilever. It avoids high leverage companies focusing on sectors like technology, consumer goods and cement. The second one is Taurus Ethical Fund. Objective is to provide capital appreciation through diversified portfolio of Sharia compliant equities. If you look at the trailing returns, they have been strong, approximately 13.89 for the last 3 years, 15.98 for 5 years and 16.62% since launch. AUM is much smaller than Tata, it's around 333 crores, but it invests across large cap and tactical mid and small cap companies as well. Both the funds align with Sharia principles and long-term wealth creation. Tata has a large corpus and lower cost. Taurus has delivered higher long-term returns. So combining them with gold provides growth plus a hedge. You can find the Sharia compliance for both of these funds in their respective websites as well. Let's make these things tangible. If you're 35 and want to accumulate around 3.5 crores over 25 years at 11% return, you should be looking at investing roughly 40,000 rupees per month in a balanced portfolio of ethical equity and gold. If you are looking at a higher contribution of 1 lakh per month, the total corpus can grow up to 9 crores, giving you far more than the 3 to 4 corpus which is required. Even a lump sum of 2 crores invested today, split between ethical funds and gold, could grow to 3 to 4 crores in over 10 to 12 years. The key is consistency. Let compounding and discipline do the heavy lifting for you. To understand how these asset allocations can be done much better, and if you're looking to invest on yourself, do check out the course which I have prepared for you. So how does this all fit together? By investing in ethical funds like Tata and Taurus for growth and balancing them with physical gold or Sharia compliant gold ETFs, you can create a portfolio that's halal and resilient. Start early, invest regularly, and increase your SIP as your income grows. For long-term goals like child education, maintain a higher equity exposure early on. Then you can always gradually increase the gold allocation as the goal approaches nearer. For retirement, a balanced or aggressive split can help you reach the 2 lakh monthly target very easily. The sooner you begin, the smaller your monthly installments would need to be. So finally, if you're looking for personalized investment plans using these ethical funds and gold, feel free to reach out to me at the number which you see on the screen. I will help you build a portfolio aligned with your goals, risk, appetite, and also the values. You can reach out to me directly via WhatsApp using the link below. We also have a WhatsApp community in which I post regularly updates about Sharia investing in India. If you did like this video, please do share it with your friends, and if you have not yet subscribed to our channel, please do so. Please remember, this video is for educational purpose only and not financial advice. Past performance may not guarantee future results, so always consult a qualified advisor before making investments on your own. Thank you for watching. See you in the next video. Thank you.